By Ruthie from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. Today I want to show you a new trade we're placing on the market today on trading on CFDs, contract for difference. Some of you may not know what CFDs are. I will explain to you shortly what it all means. Well, first of all, the company that we traded today is called Perseus. It's a junior gold mining company. Before I go on, I just want to let you know that with CFDs, you don't need a lot of money to open an account. I want to show you that we open an account for $500. Let's call that risk money. And by the way, if I lose that money, I'm not going to lose any sleep, even if I lose the whole lot. But of course my intention is to make money, not to lose it. Previously I entered a trade on Appen. This is another company. I entered on the 26th of June when it was trading at $27.09. And because it is margin related, I only put a very small amount of money into the trade. And I only bought 100 shares. If I was to buy the 100 shares in the market, in the share market, I would have actually had to spend, that's $2,709. But since I've opened the account with only $500, I explained to you that trading CFDs, you only need a very small proportion of the total amount of dollars. A bit more later on the explanation behind that little leverage. Anyway, I closed that particular trade on the 1st of July when it was trading at $29.16. That's making $147 profit. You may say, well, that's not a lot of money, but look at the margin, the percentage. 29% profit. I only bought 100 shares. I could have bought 200, and if I put more money into my account, maybe I could have actually bought 1,000 shares. But it's all relative to the amount of money that you start with. And what I really want to explain here, that by trading CFDs, you don't need a lot of cash. You can only start trading CFDs with a small amount of money. However, you need to know that that small amount of money you can lose in one little trade. So you need to understand the risk and reward. But because it's a small amount of money and it's risky and it has good, beautiful leverage, then you need to understand the consequences. Today we're trading Perseus. As I mentioned, it's a junior gold mining company. So, okay, I'm going to show you that I bought 2,000 shares or CFDs at 61.5 cents. So, of course, if I was to buy this with real shares, I would have actually had to spend $1,230. But trading CFDs, I only put very, very small amount of dollars, which is a very small proportion of the 1,230. Of course, we're going to really follow that particular trade day after day, and we see how it progresses. And by the way, we've got a paper that we put together. Here is actually the link. If you click on that link, you'll open the paper and you'll see all the fundamental and technical background behind why we chose Perseus. The most important thing that I want to mention to you, it is gold related. And gold is inversely correlated to the US dollars. If we think, as we do, that interest rate in America is likely to drop 25 basis points or maybe even 50 basis points between now and the end of the year, there is no doubt that that will affect the price of gold. Okay, let's move on to the next chart. Okay, so this is the new trade, and this is the Appen trade that I mentioned to you before. So we entered at the price at $27.09. We closed at $29.16. We put $500 to open the account. We finished with $647 when we closed the account. $22 were taken in commission when we sold, and $22 commission when we bought. However, there is also an interest rate proportion on the full value of the shares. That's daily interest rate that is being charged. It didn't really worry us a lot. As you can see here, there are a few dollars here and there. But anyway, so that is actually the trade. And now let me talk to you about what CFD is all about. In finance, a contract for difference, which we call CFD, is a contract between two traders. You usually have a buyer and a seller. Everything that you do, you need to have a transaction. The buyer thinks that the price is going to go up. We did when we bought Appen, and now we believe Perseus is likely to go higher. The seller, on the other hand, who goes against our forecast or our transactions, believe the opposite. So they actually sell first and then buy later. And if they are correct, the price will go down and they'll buy the shares or the CFDs at a lower price, and the difference between the selling price and the buying price will be the profit or the loss. If they sell at a price and the price goes up, then obviously they will close at a higher price, which will be a loss. For us buyers, we want Perseus to go higher. And if you open the paper that we wrote, you will find that we have some forecast, and you need to understand whether you are an investor or a trader. The time frame within what you trade within is important. We believe if you're going to trade CFDs, you are most likely a trader. You are not buying a CFDs and hold it for years. In actual fact, CFDs are actually for short period of time. Why? Because as long as you have that position long, in other words, you buy, hoping to sell later at a higher price, the market will charge you interest on the amount that you didn't put forward. Remember, you only put a small proportion of the total value. The market will lend you the rest and will charge you interest every single day, including Saturday and including Sunday. So the price goes up, the price can go down. The difference between the price you buy and the price you sell is the contract for difference, and hopefully will determine to be a price. You need to understand that everything we do in life, everything we do in finance has got a risk factor. And you need to understand that risk factor before you enter the trade. There is no guarantee that you're going to make money. However, there are always probability. We believe there is a better probability, more than 50%, that Perseus will go higher. Why? Because we think that the interest rate in America is likely to go down. This is the chart. You can see the chart of Perseus. On a base of 100, that is, let's assume it's 100 represents the starting point. Today, in 50 weeks, Perseus has gone up by 50%. Is it likely to go higher further? Well, we hope so. And of course, if something goes wrong, you need to have a trailing stop loss. So if it goes against you, we believe 20% trailing stop loss from the entry point is important. So you can only lose 20% of your initial price. And if the price goes up, the trailing stop loss will also go higher. So if you're going to be triggered on your trailing stop loss, you're going to close and not to lose 20%, hopefully you'll lose much less. Depends on how much higher the price went and pushed the trailing stop loss higher as well. So this is the mechanical system, and if you do our course, and we run courses on a regular basis, we teach you more about the mechanical system that we have designed over the last 10 years, which has 70 to 80% probability of success. Every day we try to see what is hot and what is not. We show you what to hold and when to fold your trades. I'll explain to you more about that mechanical system if you join the course. So, you want to learn about to trade CFDs? Why we like CFDs? Because first of all, there is no expiry date. That's of course if you trade options, there is an expiry date. CFD contract is normally 1-to-1 with the underlying instrument. So in other words, you can see if the price goes up by $1, you know that your CFD has gone up by $1. Finally, the disclaimer. I don't know your financial circumstances, so therefore everything I said here is only of general advice only, And before you take any action, please talk to us or talk to your professional advisor. Remember, everything we do is no guarantee, and there are losses and gain that can be made trading any financial instrument. If you have any questions, all you have to do is ask us. This is actually my details, george@fssecurities.com.au. This is our website, and if you want to call us, if you're ringing from overseas, 61, that's the country code. Don't put the 0, just 61-411-259526. Well, happy trading, and hopefully you enter the trade and make some money.